Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Asian session live market analysis now, and I was supposed to do it on Monday to give the expected market moves for this particular week. Sorry, I could not do it yesterday, and I am presenting the same today. The forecast for the week 7 to 11 January 2013. And we are on 8th between 5 and 5:45 GMT. I will try to explain what are the expected market moves for this particular week and how exactly we can prepare to make our trades. So first of all, I will just review the market here with the help of the live market quote page, and you can see that euro is currently trading around 1.312022 and yen is trading around 87.4647, and it was trading yesterday about 88 level and come down. And GBP, euro was trading around 1.30 level, it has come up, and GBP was trading yesterday around 1.60 level and it has come to 1.61, and USD CHF was trading around 93 and has come to 92. Then Canadian dollar was trading around 99, and from there it has made a nominal drop and then now gaining. And Australian dollar, which was trading around the same level yesterday also. Now, when you look into that of the live market quote page, you come across that euro is making positive net change and GBP is showing negative net change, and also USD yen is showing negative net change. So euro is making USD weakening move, and USD yen is making USD weakening move, but GBP is making USD gaining move. Then also CHF is making the USD gaining move, and Canadian dollar is also making USD gaining move. Australian dollar is also making USD gaining move. So you find euro and USD yen are showing USD weakening move. The rest of the pairs are showing USD gaining move. It is a contrarian move. It's the second day of this particular week. So to start with, they are making a narrow range swing in all currency pairs excepting USD yen. So what do you understand out of this? When they make this sort of moves, we know very well that in the case of yen, they made a big spread, whereas in others, they have not made any big spread. That means they wanted to handle all yen crosses. So if we look into that of the yen crosses, you will come across that euro yen is trading near that of the low and slightly firmed up a little bit because euro is in positive net change, and also GBP yen, which is trading closer to that of the low. So they are trying to make a downward stop, and in the case of all the yen crosses here, and later on they will gain further levels, and euro USD yen is expected to go above 88, and then also euro and GBP to gain similar to what they had done it yesterday. So as a result, you will come across that yen crosses are expected to make one further upward move. So why I explained with regard to the yen, because yesterday they handled euro and GBP on their lower level consolidation, and they made the intentional move on the downside and picked up all the sells from that of the bearish traders, and after the non-farm payroll, and they just made the drop and induced the traders to get the feel that the market might just make further drop. On Friday, you would have noticed that after making initial drops, after that of the non-farm payroll, during the late US session, they firmed up. And again, yesterday, for the week beginning false move, they made the downward move intentionally, but with a brief downward move. In the case of euro and GBP, not much of a drop, and they have been holding it near that of the low and just making a brief downward stop and till European session. But during the US session, they started gaining the levels. So it was an intentional move because they did it for 2 sessions and started the 3rd session and started recovering it. And now they are making an extended move on the downside briefly, and Again, no, you find that they've set the initial low and they are not breached, and then subsequently they are expected to make further gains as the intentional move. So the intention is to gain the levels in the case of Euro and GBP, and also in the case of USD Yen. In between they will make some corrections in them in order to handle the crosses. So that we need to understand, and once you read their intentions, you will find that trading becomes much easier. Otherwise, every time they make a quick move, we become surprised. So we need to understand their intentions to start with. Then I'll explain to you the expected market moves for this particular week with the help of another slide. So on 7th, yesterday you would have seen the swing and slide during Japanese session, followed by that of swing during European session, lower level swing, and then rise during that of the US session. So week beginning false move, they did it during that of the Japanese and the European session, and afterwards started gaining the levels. And today they are expected to make the swing and gain rise moves, and during that, in between the sessions or in the mid sessions, they are expected to handle the crosses and then continue to gain the levels in the case of Euro, GBP and USD Yen. And tomorrow, 9th, they are expected to make rise and fall moves and zigzag moves for the midweek, but the downside will be much limited, but the upside moves will be more. And in 10th, you know that the interest rate decisions are expected to be announced. During that time, they are expected to swing and rise, followed by that of swing and quick rise moves during European and US sessions. Then 11th January, Friday, weekend, they are expected to firm up and make a little bit volatile moves during the European session, and then make a quick rise during that of the US session. Then next week, 14th to 18th of January, they are expected to make further aggressive gains on the upside in the case of Euro and GBP, and also in the case of USD Yen. So as I explained many times, that USD Yen, they started making an upward move, and it is a one-sided rise. So in the one-sided rise, any correction is a good buy opportunity near that of the low. And you would have noticed that during start of the day, around 1:30 GMT, they made a very quick drop in the case of USD Yen, and subsequently gained back. And from the 87 level, then they dropped it to 87.24, and then they have gone up to 87.70, and then they have just made a dip now, 87.48, 49. So this is a consolidation they are trying to hold it in the middle level, and later on they are expected to gain the levels as well. So it is only about 30 to 50 pips drop from that of yesterday, holding level of 88. And they just made the downward move in order to induce the long holders to liquidate, those who are weak-minded to liquidate the long, and then take it to 89, and they will trade 88 and 89 very briefly and reach 90 area very fast in this particular week. Now coming to that of the market reading. So we note down the initial high and the low around 3:30 GMT in 4 majors and 2 commodity pairs, and use them as a reference level for the day, the 24 hours day till end of US session, and try to read the types of moves. They do it in sequence. So I explained to you the sequence is they alternate the extended move with that of the intentional move, and in between they make the stop and swings, etc. So that we need to follow. So after the extended move, they will definitely make an intentional move. That we need to understand. So with regard to the market reading, yesterday they have been trading around 1.3043 as the initial low, and came down to 1.3018 and as a brief extended downward move in the case of Euro, and then subsequently they made the rise. And in the case of GBP also, from 1.6042 they came down to 1.6022, just 20 pips, and then subsequently they started gaining the levels. And today you come across the initial low is higher than that of yesterday's high. So similarly, in the case of GBP, the initial low is higher than that of yesterday's high. So those who had taken the sell positions yesterday, still they are not given the profit booking opportunity. Normally what the traders do it, and if the market moves like that, they wait for a day because it is not weakened for them to go away from the market. So they will wait and try to do the average trading. Just take one more sell and try to close them and things like that. And later on we will see that once the traders accumulate more positions, leads to over trading, then they start making very quick upward move. This is the normal scenario. I am not telling it for the first time, but again and again the traders get trapped in this. That is the unfortunate situation. Then in the case of yen, yesterday they have been holding around the 88 level. 88.38 was the high, and then 88.97 was the initial low, and today the initial high is less than that of yesterday's initial low. So 87.82 is the high, and 87.24 they formed as the initial low, but still they are not breached it, so they are likely to go up. Will find it will also start gaining the levels along with that of euro and GBP. The case of Canadian dollar, 98.56 is the low, 98.63 was the initial high. They breached the high and formed 98.73 and holding above 98.63 now. So they intend to gain more levels in the case of USD CAD as a contrarian move, and it might appear that they might do the USD gaining move, but they are expected to make contrarian move. See, now you find euro is in positive net change, GBP is in negative net change, the Aussie crosses. Because in the case of euro and GBP they are not breached the initial low, only in the case of Australian dollar they breached it, and this is mainly to handle the process. If they make overall USD gaining or overall USD weakening move, then you can understand it is pertaining to that of the US sentiments. But this is local sentiments. They try to create depending upon the traders' pending positions, and people would have taken buy positions in the case of Australian dollar because it was looking very strong. So the players are just making a dip in order to induce them to liquidate the long position before making further rise. Then the high was 1.0517, which is not breached, and the low they have breached it 1.0488 by about 12 pips and came down to 1.0476 and come closer to that of the initial high 1.0482, and soon after about 2 hours after, that means from 6:37 GMT, they are expected to go above that of 1.0488 in the case of Australian dollar. If they sustain above there for 30 minutes, then you can be rest assured they will make further rise in the case of Australian dollar also. They're making swings in the case of euro and GBP, but in the case of yen they made the wide range swings because the spread has become really high, more than 50 pips, 60 pips like that. Then they are trying to hold it closer to low and inducing the traders to sell. Probably the traders could perceive that it is a sell level because USD yen is not able to breach 88 as a strong resistance. That is how they will pretend, and then make a easy going above that of 88. So every time they have been doing it from 81, 82 onwards. So again repeating the same trick around 88 is also not going to be a surprise. So after the market reading, so I'll explain the trading strategy. So based on the forecast and the market reading, we try to decide in which pair we have to enter. If it is near the low and the low is not been breached for more than 30 minutes from this early or the late session, in the case of majors, we try to buy. And if it is near the high and not breached the high in 30 minutes from the start of the session, we try to take a sell. But still, keep hedging order or a stop 30 pips. So risk at a given time only 30 pips. Then once the position makes profit, we keep stop at entry and remove the hedging order. So we are always cautious. As soon as the position is taken, we try to keep the hedging order with an objective view. Our reading can go wrong. So only if you are having a mindset of that nature, then we will be able to objectively perceive the market. If you do all the analysis and expect the market to go up, and suddenly if the market drops, you become stunned, then you go in for crisis management, and without keeping a stop, once the loss become maximum or increased, then you try to take a decision whether to close the position or just wait for some more time. But invariably, no mind will accept the loss. So you tend to allow the loss to grow, and later on you find that the margin is being squeezed, and then distress trading decisions are taken, and the people try to close the position with the maximum loss, and later on see that the market is making the move in tandem with that of their expectations. So anybody who has taken the buy position on Friday would have lost the patience on Monday when they had done the week beginning false move. The very purpose of doing week beginning false move is only that those who carry forward the positions to that of the next week, they try to test their patience, and later on the traders lose the patience and liquidate. So that is why I always say that when they rise on Friday, you try to book profit and re-enter again during week beginning false move. Market gives plenty of trading opportunity. Why you become possessive of the position? And we can just book profit and again re-enter when they are showing new lows, or just set the same low and things like that. And later on, we will be able to see sizable profit in that. Instead of one trade, you try to do two trades, you will be able to get more profit, so no anxiety and no long waiting period, etc. So once you keep stop at entry, then your mind become very, very calm. That is the most important thing in trading, because only when you see that the equity erodes, which act as the trigger for your panicness. So once you keep stop at entry, your mindset says that okay, even if they drop the market or move the market against my expectations, then I am not going to lose anything. So the hard-earned money will not be lost. Then you find that you are able to really perceive the market. Some people have got the tendency of moving the stop. When they come closer, they just move the stop lower, and when they go up and rise the stop, in this sort of things they do it. And invariably what happens when they start moving it down, then the market might come up to that earlier stop level and then go up. Then what they do is they try to move it. Then again they will make a dip. Then the traders try to move it down and wait. Let the market go up, then later on I'll move the stop upward, because they do not want the stop to be filled. Then what happens? They make a very quick drop and hit the stop and make the loss bigger. Then later on start rising it. So always quick moves are false moves. So don't play with the stop of moving away from that of the market. That doesn't help at all, because the players know very well the traders' psychology, because they were also traders initially. By fortune, when they have become billionaires, they have become players. That's all. And in order to sustain their billions, and they have to ruthlessly play in the market, and we cannot avoid it. Even a small trader, when he is holding about $500 or $1,000 and he is trying to move the stop or trade without a stop and things like that in order to protect the equity, you can understand how a billionaire will trade. He will not willing to take any risk for his billions, because if he lose that billions, he will come to street and he cannot change his lifestyle. So obviously he will try to earn at every given moment in the market. So we have to be cautious, because we don't have any money to counteract or trade against them. We can only find their mindset. Read their mindset. As long as they are human, we can read their mind. And if there are heavenly bodies, then probably we may not be able to find what their intentions are. But as long as they are human, let them be billionaires, but still we can read their mind and read their intentions, read their weakness. then try to exploit it. And that is the only method by which you will be able to limit the risk and maximize the profit. Now the expected market moves for today. Swing and rise moves during that of the Japanese session. So the session timings are given here, 0030 to 7:30 GMT. Then 7:30 to 8 GMT is a gap time before the start of the European session. The European session is expected to make swing and rise move again. Then 14 to 14:30 is the gap time. Every day you would have noticed that gap time they are making false move. Then 14:30 to 21:30 is the US session. They are expected to make initial volatile move, pretend as if the market is going to drop, and then quickly rise the market. And then everybody will say that, okay, market is bullish after the rise. But when the market is about to go up, very few say that market we can do buy and sell trade. Till such time they say sell and buy trade. When the resistance turns support and everybody started telling that the market is bullish, and then you tend to take a buy. But the players know, okay, all the traders have gone long at the highest level, so let us make one drop and hit their stops and go away, go up again. So you just facilitate the players to make easy money because of the emotional trading. So once you go in for the breakout trade, the players know plenty of traders have gone for the breakout trade. So it is easy for them to make one drop. Just if somebody sneezes, they will say, no, US dollar is going to become strong again. They will make a drop as a reaction for the sneezing and then go up again. It is very simple. They can use anything as an excuse for a drop or a rise and quick rise, etc. And you know, yesterday, Monday, last week, how exactly on the 2nd of January, they make a very quick rise, and as if it is be a free rise for Euro and GBP. But later on, you have seen how exactly when all the events came out, they just reacted differently. So that is how they play with the market. And immediately everybody will say that then buy on rumor and sell on facts and things. Those things are fine, but you are not participated in the market. After the market, it is very easy to make a comment. Giving the forecast is vital for a trader. I will now take up the questions and answer to the questions which are asked you. Okay, how do they handle the crosses, wine brown? So it is easy to understand how they handle the crosses. See now, Euro is showing positive net change, USDN is showing negative net change. Okay, both are showing USD weakening move. Then you find hardly any pip change in the case of Euro Yen. It's only 22 pips negative net change because Euro has shown less pip gain, whereas USD Yen has shown more pip loss. Now, Euro is showing positive net change and GBP is showing negative net change. It's a contrarian move. When they make a contrarian move, Euro GBP is showing a positive net change because GBP, the denominator, is weaker and the numerator Euro is stronger. So you find a positive net change in the case of Euro GBP. And you know, many asked me when it came to 82 level that whether it is going to drop. I said that it is going to drop. They just made the upward stop and before making for the drop. So that is what they are trying to do. It every time make an upward stop and then drop a little bit. Then in the case of Euro CHF, you find Euro is making 11 pips positive net change and CHF is only 2 pips negative net change. So USD CHF is not making that much of USD weakening move when compared to that of Euro. So as a result, you find Euro is showing more USD weakening move when compared to that of CHF. As a result, 6 pips positive net change is seen. Similarly, Euro Australian dollar, Euro is showing positive net change and Australian dollar is showing negative net change. Okay, so you find a big rise here. So you can easily find how exactly they handle the crosses if you just go through the majors. They only make like a puppet show. They only make the moves in the case of the majors and the commodity pairs, with which they are able to bring in the volatility in all the crosses. Then wine. Last week before non-farm payroll, it seemed that they changed the Euro USD market trend to a bearish market. Okay, when all traders go in for a breakout trade, they have to necessarily make an extended downward move to hit the stops before making further rise. And you know that in December end, they made an extended downward move and then started gaining the levels on 2nd of January. Then again they made last week the extended downward move and started gaining now. So December 1 was mainly to handle the options and the derivative market, just to hit the options or the futures on the upside as well as the downside by making big move as a year-end trend reversal. Then year beginning trend reversal, they made a quick upward move on 2nd, and on the 7th they made the downward move, and again on 4th they made the downward move, 7th and 8th they made 7th they made the downward move and started reversing it. So this is an extended move on the downside before making a big upward rise as a shift in trading zone. That's what they are trying to do it. We need to read it to earn from that of the market. And people might be thinking, this man is always telling buy and sell, buy and sell, buy and sell. So any one day the market has to go up, so his call will come true. That sort of comments people can make. It is up to you to view it properly and understand by yourself and get convinced. Because if your mind is not in a position to think, we tend to blame others. And wine brown. Last week before, okay, that one. Yeah, sir. Do you still expect Aussie to be in the range of 350 to 550? Yes. It's going to be in this particular range for a long time. And winner FX. What do you mean by shift in trading zone? See, you know that Euro is trading around 1.20 to 1.25, 26 and things like that. That was one particular trading zone, the lowest level trading zone. Then from there they brought it up to that of the middle level. After passing through 1.27, 28, 29, they come up to 1.33 and going back to 1.29 and swinging there. They are not retracing to 1.20. So that is middle level consolidation. Next, they are expected to make a rise to 1.34 and then to 1.38. Then from there 1.33 to 1.38 they are expected to make higher level consolidation with an upward stop band. So that is how it is called. In a year you find in the chart they make a spread of about 1500 to 2500 pips between the low set for the year and the high set for the year. And if you think that it is one single move or due to some factor they have made it, it is wrong. Even nothing happens in the world, still they will try to make the shift in trading zone, because they need to bring the margin call to that of the traders, those who trade without a stop. And also once they come to that of the shift in trading zone, then the traders must do buy and sell trade, will try to go in for a sell and buy trade. So that is how they induce the traders to change the mindset. Similarly, when they drop endlessly, so anybody who is having a bullish field to do a buy and sell trade will think that it is a hard time to become a bearish trader and do sell and buy trade, and later on once they all started selling, the market reverse and go up. bullish, it appears bullish. When all say it is bearish, it appears bearish. That means we don't have any sense of perception of the market. So we should not be influenced with that. We have to read and get convinced by ourselves. Because there are a lot of distractions available in the market, and that is part of the game. That is how the people can be cheated in the money market. What move did it Euro USD? Down initial low and then subsequent started gaining slowly during European and US session became visible gain. So that is an extended move yesterday, and then it's for about 2 hours. Then intentional move is for 2 sessions and start of the 3rd session. Again today they have just done the extended move or a swing closer to the low, and they are expected to gain the levels. Not even extended move, they just made the swing. After setting the initial low and the high, they are not breached, excepting that of the quick move in the case of USDN, that to the low they set around 3:30 GMT. Afterwards, they are not breached it. So only in the case of Canadian dollar, they breached the high by 10 pips. USD CAD. And also Australian dollar, they breached the low and they are still staying below the low. And slowly they will gain, because they gained Australian dollar more yesterday, but today they will just lag behind, so that when euro gains, Australian dollar will gain less in order to handle all the crosses. As I explained, that today they intend to make more of moves in the case of crosses when compared to that of the majors. Is the intentional move opposite of extended move? Yes. When does the intentional move happen? They do it in alternative sessions, sir. So if they make an extended move downside during the European session, the intentional move will be US session, Japanese session, start of the European session. The next day, when they make an extended move during Japanese session, then Europe and US session, they make the intentional move. So there is no definite setting like Japanese session extended move, European session intentional move, like that. And you have to keep it in mind, they don't do hat trick. If you combine all my concepts, then you will be able to understand that. What is expected? Expected to make subdued moves, is not participate in a big way. What is direction of USDN? USDN is expected to make an upward trend. Money magnet. Other market makers are true players. Market makers are the platform providers, but players are different. Whom buy when the market is selling, and sell when the market is buying, and then distribute all the accumulated inventory by charging markets sentiment. No. They are different in JP. That's the observation of 30 minutes in the beginning. A must in all 3 sessions. See, don't strain yourself of watching all the 3 sessions. Whatever the 2 sessions you will be able to watch, still you can watch it. And the session which you have not watched, you can try to read with the help of a chart what happened in the market. You will be able to easily trade. Every session they give trading opportunity. It is not necessarily that you have to keep awake during late night and early in the morning and things like that. Don't strain yourself. Once you strain, your mind becomes weak and you try to become fatigued. Because of that, you tend to make distress trade. Keep up fresh so that you will be able to really use your common sense and trade. Do the players use past market opening high and the low as important levels? They try to use it in order to induce the bullish and the bearish feel, so that everybody will say that no, it is higher lows and the higher highs, so market is going up. Then they simply reverse it. They use it in order to pretend to trap the traders. Should we disregard the past levels? See, the past performance does not guarantee the future, you know very well. And history does not repeat by itself. History gets repeated in a modified way. So if you keep that, then you will not give much importance to that of the past record. You will just use it as a reference level to find out, and nobody will hold a position for 200 days and come for selling if you go in for a 200 days moving average and things like that. So theoretically it is fine. Practically you don't come across such trades happening in a big way in the market. See, all the statistics has got a meaning. If you go into the meaning of it, then you will be able to understand it is irrelevant to use it in this current market scenario. I am a statistics professor. If you think that I am criticizing statistics, because I know it has got a limitation in a manipulated market. If the market is genuinely moving based on the herd mentality of the traders, and also the market sentiments are not artificially rigged, and there is no artificial demand and artificial supply created in the market, then statistics will work 100% perfect. But unfortunately, the statistics is used to misguide the traders, and simply people say that market is such a huge market and it cannot be manipulated. But nobody tells you that 2/3 volume of the market is of the players. They do the circular trade. They sell from one counter of the bank and buy from another counter of the bank, and thereby you come across the swings happening in the market. When all are watching the market, sitting on the fence, what is going to happen after non-farm payroll? They are making moves just to keep the market alive and create the traders to develop fear and tension. So that volume is 2/3. So if similarly there are so many informations available that whether the traders are net long and net short, and so many people refer to me, the court data said that the net long in the case of USDN is huge, but still why USDN has gone up? And I asked one simple question. The data does not say whether the players are long or the traders are long. The traders are long, they are going to be, the market is going to, players are long, if the market is not going to drop, they will try to gain more levels and book profit, like they go up to 88, from that of 85 and then booked profit, and holding around 87 to rise again to 90. That is how they do it. And if the traders are long, then the market will correct. If the players are long, the market is not going to correct. So that court theory or data does not discriminate whether the volume is of the traders or the players. So as long as this demarcation is not given, we find little use. So I take this opportunity to thank FX Rate and also you people for coming and attending the webinar, and I'll come back on January 10th, Thursday, to take yet another session of Asian Session Live Market Analysis and try to review the forecast what I given for this particular week. And if there are changes, I will say that the changes have happened. I am not telling that the market has to move in tandem with it of the forecast. Keep in mind that this is only a guidance. Then you have to do the market reading on a daily basis to find out the accurate type of moves that will help us to take trading decision. Ultimately, whatever be the analysis we do, that should help us to take a trading decision. That is vital. So thank you one and all. See you on Thursday.